Hey everyone, thank you for joining us again for another episode of The Agent Investor. The goal of The Agent Investor is to have conversations with others who are involved in the multifamily and commercial space to help you all make informed decisions in the multifamily commercial space in the future. Today we have a good friend of mine, Brendan Chisholm from Connecticut, as a guest on our show. How you doing, Brendan?
I'm doing wonderful, Brendan. Thank you so much for having me on today. And I'm flattered that you think I'm going to actually provide some insights into the commercial multifamily space for the listeners here. But we'll do what
Absolutely.
we can with what we got.
You absolutely will. You're bigger than you know. All right, so just so background on Brendan and how I know him. We actually, how did we meet? I think I actually came to your meetup. I don't know if it was the first time down in Stanford. He runs a meetup called the Multifamily and More meetup, if I'm correct.
Yeah, it's a networking event in Norwalk or Stamford, depending on my mood as to where I want to travel to. That brings together all of anybody who's interested in getting into multifamily investing on a larger scale. When I say larger scale, commercial multifamily 5+ units, but your typical avatar that tries to come to my ups, bring in securities attorneys, property management lenders, all of that do work in the commercial space. Out of state investing, in particular, multifamily syndications as well. So it covers the gamut as to what we do. Yeah, that's how we met. I think it was October of 2022 when we first
Oh,
met.
good memory.
And yeah, and since then, we've cultivated a wonderful relationship, not just through real estate, but just being an acquaintance and a friend with one another. It helps that people mix us up with our names,
That's all
not
good.
telling anybody the correct way to spell it, but
I mean,
yeah.
yep. So while you're at it, first thing is tell us a little bit about yourself, your background, what you're doing, what you're working on.
Sure. So my name's Brendan Chisholm. I'm based in Stamford, Connecticut. I'm a husband and a father of two boys. One's 4, the other's 2, soon to be 3. I'm a general partner, a real estate operator for just under 300 doors spread across 4 different properties in 4 different states. First one's in the suburbs of Atlanta. Another is in the suburbs of Charlotte on the South Carolina side. Another one in Hampton, Virginia, which is like the Virginia Beach, Norfolk area. And then the last one in Florence, Alabama, which is about 60 miles west of Huntsville. My investment thesis is focused on light to heavy value add or distressed apartment communities throughout the United States. And I'm building out a vertically integrated real estate company that will focus on mixed use properties in Connecticut. My real estate holdings are mostly on private placements, which we'll get into a bit later, as both a GP and LP throughout the United States. And aside from those properties I mentioned, I'm a limited partner for a short-term rental fund, spec single-family home constructions in Massachusetts, senior living developments, and a few other things as well.
Dude, I didn't know half of that. I knew half and I didn't know the other half. So you're involved in a lot right now.
I diversify. I'm big into diversification, into asset allocation, and diversification is a critical component. One of the great things about real estate that I found is there's so many ways in which you can contribute as an operator, as a general partner, as a limited partner, and it's on you to be able to choose which investment type you want to go in based off of your risk tolerance.
Mm, very good, very good. All right, now cool. Let's get to it. All right, so Brendan, I know you as a syndicator. That's how I relate to you among all the other things that you do that you just mentioned. But in terms of syndications, before you got into syndications and real estate, were you actively investing in syndications? What made you decide to go that route? What sparked getting into syndications?
Great question, Brandon. I went straight into commercial multifamily investing. When I say commercial multifamily investing, 5+ units. The syndication was the first deal I did. I took a course in 2018 through 2020 after I heard somebody speak at an event, but I found that multifamily investing in commercial real estate, as the commercial real estate investing, is much more of managing a P&L and the practical nature of managing a profit and loss. And I was attracted to the economies of scale that you could find in large scale investments. A syndication is a word that gets tossed around a lot in today's world. Depending on which news source you read, it could be the worst thing in the world. For others who have fiduciary responsibility to their investors, it's actually a pretty good way in which GPs and LPs can work together to create scale in there. A syndication, I'll just give you a background on what it
Please.
is a partnership between a group of investors, typically limited partners, LPs, and general partners, GPs, pooling their resources into a single investment. Syndications are not just limited to multifamily. As I mentioned, I'm also in a short-term rental fund, which is they do vacation homes spread across multiple homes throughout multiple markets. You can also go into developments. One of the big things in the 80s was the oil and gas boom. So it's really just LPs, for the most part, who write checks into a larger investment because they trust the jockey, or they like the market that they're going into and they want to get some exposure into that market, into that asset's investment type. For me, for getting into what made me decide to go into the syndication route, I used my knowledge with multifamily syndications in general as to what they were and securities law to help scale into real estate, to scale real estate at a faster level. I thought there was a little less risk involved with it, although there's tons of risk involved with what we're doing. If you identify the risk properly, you can mitigate what you're trying to do, right? Especially with what I do going into larger scale multifamily, and I use that with quotations. We're looking anywhere between 45 and 120 units. That's my current GP portfolio. Yep. What attracts me more so than like in your typical single family rental, which I consider 1 to 4 units, if one person moves out of my 100-unit property, my vacancy is 99%. If one person moves out of my 3-family, my vacancy is 67%, right? Like if something happens at that one unit where I have to replace a fridge, we're able to forecast a lot of these into a budget and a trailing 12 in financials as to what we expect to do each month, and it's covered. If a fridge goes out in one of my units, it doesn't kill my cash flow for an entire year. Yes, it definitely doesn't help with the cash flow, but like those are known things. If, again, we'll use that 3-family, for example, if a fridge goes out, you're going to lose all of the profits for that 1 month, maybe 2 months, unless you have ample reserves tied into it. I decided to go into commercial multifamily for the economies of scale and the practical nature of managing a business and a profit and loss statement.
Absolutely. Yeah, I also agree on the scales of economy. I mean, just the simple fact that you can, like you said, you can not anticipate, but you can budget on a much larger scale, and it's a much smaller hit when things happen versus when in the 3-family. And a lot of times in those 3-families, those little things are really big things in those smaller units versus these larger syndications. And also, for me personally, syndications, I find it to be many more opportunities because you can, as an LP as I am, you can work with multiple GPs to find deals. And in today's market, this is getting deeper into our conversation, but in today's market, I personally think syndications are a very good route to go because they are finding deals that are not necessarily local to your market, and they're probably better opportunities and less risk than investing in something small and localized. No, I wouldn't say localized, but something on a smaller scale that probably doesn't cash flow in the first place. But yeah, no, absolutely. I'm a big proponent of syndication, especially in today's market. It's just really hard to find deals, especially in our local market of Connecticut. So yeah, so we'll jump into the next one. It's kind of along the lines of what you were just talking about regarding syndications and what are some of the key differences and maybe even similarities between someone working as a sole investor and someone working as maybe a syndicator in terms of multifamily.
Sure. So the syndication allows individuals to invest in assets that are typically too expensive for Main Street investors. Right? Like the deals that we're targeting, purchase prices anywhere from $4+ million up to $15 million on the purchase price. The 4 deals I've done, it's 4.2, 4.5 million, 7.5 million dollar, $10 million plus bringing in additional capex. I wasn't born with a silver spoon in my mouth, so it's not like I can go out and go do that. And I haven't turned over enough stuff where I'm fortunate enough to be able to do that right now. But like what that provides us is we understand we craft a business plan to be able to go after these deals. Let me take that back for example. Sure. So for example, through syndications, I've been able to leverage my expertise as well as my partner's expertise in the real estate world to acquire and operate properties that require a substantial amount of capital to be able to purchase. I mentioned the deal size is anywhere from 4.5. The purchase price on these deals, 4.5 to $10 million. That requires anywhere from 2.5 to $6 million to raise money for. So it's a substantial amount of money that you have to be able to go into to get into these deals. And typically that's not, for your entry level real estate investor, that's not easy to do. We're not Wall Street people and we don't have those large checks that we can write. So a $50,000 investment for a real estate syndication can provide a means for an investor to get into markets and or asset classes that may not be accessible to that sole investor. In today's market, a $50K down payment would typically afford you the opportunity to buy a $200,000 single family home in most parts of Connecticut. Meanwhile, a $50,000 investment in a multifamily syndication or whatever type of syndication you're going in gives you an equity stake, albeit a small stake, in an apartment community or whatever type of deal that you're going into in any market you want to invest in, and share the risk among the other LPs and GPs.
Absolutely. Yeah, one thing you touched on, which I love a lot about syndications and multifamily syndication, is really the aspect of a team that you're working with in a GP position. When you're in a sole investor position, you're really playing the role of everyone. You're playing the underwriter, you're playing the negotiator, you're playing the asset manager. And it's very rare to see someone who's very efficient at all those roles. So you're really probably running an inefficient operation by trying to do it all on your own, versus when working with the syndication, again, I'm an LP and I'm looking at the GP team, it's usually a handful of people with different skill sets, and they are good at what they do, which really makes it a much more efficient and honestly a much less risk. I don't say less, but I feel like it makes it less riskier because those individuals are skilled in what they do versus one individual running an inefficient project, running it into the ground. So for me personally, that's probably one of the main things I love about the syndication model. And I'm a big who, not how type of person, for those who have read that book. And I just love syndication plugs into that. If you do it right, and if you have a good GP team, it's gold.
Well, that's what we try to provide to our investors, right? We're both, as general partners, we invest our money as well. So we're limited partners into this deal as well, because we're not going out, if we're going to go raise money and raise capital, we need to put our money where our mouth is, and that is making sure that we have skin in the game. Our lenders that we typically work with, they require a certain percentage of our GP stake, right? Like say it's $1 million down payment or $1 million capital raise, they want us bringing in $100,000. Typically it's more, but like just wanted to use that as an example.
Absolutely. Oh, very good. And next question, we kind of touched on this a little bit, but for those who didn't catch it, can you quickly touch on an LP versus a GP?
Sure. A general partner GP is the sponsors who take on the maximum responsibility of the investment. They source the deal, secure the debt and equity, provide asset management, and execute the overall business plan. They also devise the business plan as well. Limited partners, LPs, are the passive investors who contribute their hard-earned capital and share profit and losses of the investment. I will caveat that general partners are or should be LPs in their specific deals as well. As I mentioned, lenders require a minimum of 10% of total equity from the GP team, and this is a way in which the GP team can also get paid. There's multiple ways in which you can get paid as a general partner. I won't jump into that quite yet, but I'm also a limited partner in every single one of my deals as well.
Got it.
When the property is operating and stabilized, being an LP allows GPs to receive cash flow from the property, similar to what like your LPs will receive as well. There is the acquisition fee, an asset management fee, your LP cash flow, and then if you hit your business plan and hit all of your prefs, there's also the promote. Most of the money is made once the GPs gets into the, for how I make money, it's most of the money is when the GPs get into the promote. So typically what we do in the type of deals that we offer, it's called a European waterfall model. Private equity thing that is very popular in Europe. What it typically does is, if you were to invest $100,000 into my deal, in my offering is a 7% pref with a 70-30 split. For me to get into that 70-30 split, I need to return all of your $100,000 back to you, and I need to hit your 7% IRR. So if that's year 3, I need to return $121,000 back to Brendan. So he's already hit all his promote, what I've promised to hit, and then I get into a profit split there afterwards. So we're in the promote, it's $10,000, $7,000 goes to the LPs, $3,000 goes to the GPs.
Right. Very nice. Oh, very good, very good. All right, so LPGP, let's see what we got. What role do you play in the GP team, or what's your skill set?
I wear many hats. You talked about the inefficiencies of what we try to do. We're bootstrapping this as we go along as well. Yeah. We try to refine our processes, but we all wear different hats with it. The hats I wear: asset management, lender relations, earnest money, investor relations, capital raiser. So like we wear every single part of it. I'm also actively acquiring and disposing properties throughout Connecticut too. So like on the syndication side, that's what I'm doing. On my real estate business that I'm trying to build out, you got to wear every single hat, and you create that inefficient investor as the sole real estate investor. I'm taking what I've learned in my syndication world, all the Excel files that we've done and just transferring them over to what we're doing. So it's built in for it. I wear every single hat in the real estate world, just like I hope everybody else does too. But specifically, it's the asset management and investor relations on the syndication side.
Got it. If you had a choice to only have one hat, what would it be?
At this point, capital raising.
Yeah. Okay. No, good to know.
Yeah, and then it also, but like a close second is asset management, right? Like I think those go hand in hand, to be honest with you, Brandon, because if I'm working with people, I'm underwriting the deals too. The teams I work with, we underwrite the deals, 5 different ways, making sure that we do sensitivity tests. There's a lot of numbers that go into it, but we devise a business plan once we get the deal under, like for every single deal that we look at, we need to have a business plan as to how we're going to execute it. And when I'm raising other people's money, I want to be so in tune with what's going on at the property that I know I can speak intelligently if, say, Brandon called me and going, "Hey, Brendan, what's going on with your deal in Alabama?" Or, hey, a guy named Mike, "Hey, Mike, Brendan, what's going on with your deal in South Carolina?" If I can't intelligently speak to that to my investors, what do you think I'm doing? I just look like a capital raiser who's just trying to feed into other people that I work with. No, I'm very in tune with what's going on. So it almost goes hand in hand because I want to have that oversight and making sure I can hold my teammates accountable because people are putting their trust into me that, hey, we've devised a business plan which we feel is achievable in today's marketplace based off of the capital market, what is going on in the capital markets, as well as what's going on at a sub-market level. And making sure you're so in tune with that, kind of like if you were to do a flip, you're not just going to say, "Hey, I've raised the debt, I've raised the equity, I'm going to walk away." No, I want to be actively involved with it. I want to make sure I'm touching all my assets too. So I feel like they go hand in hand, but at the end of the day, I just enjoy raising money if we find a deal under there because those are fun conversations to have and making sure that you allow people to trust you because of the track record that you have.
Yeah, absolutely. And it's always exciting when you understand the opportunity and you can translate it well to more common people to understand what the offering is and whatnot. So absolutely. All right, now cool. Let's keep it rolling here. So many people ask, how do you find syndications to invest in? I get it all the time. In today's market, in 2024, a lot of times I find clients who have lots of money and not a lot of opportunity. And I inform them, you should maybe consider a syndication as a route. Not necessarily just multifamily, but there are syndications, as you mentioned, many different types of syndications. But multifamily is generally where I point them. Luckily, I know a couple of folks such as yourself in Connecticut that I can direct them to. But for someone who may not know you, how do they find these syndications? How do they find it?
Networking with operators, networking with limited partners, having conversations, telling people that you are thinking about wanting to invest in a multifamily syndication. It's becoming much more popular nowadays, or through crowdsourcing, and it's become much more prevalent that it feels like a lot of people have introduced that type of asset allocation into their portfolio. So making sure you're telling people this is what you want to do. You research groups, you research people's track records. We have case studies. I have case studies that I've developed on deals that we do to make sure that you have an understanding hey, we're going into this market. This is why we think we can succeed in there. And most importantly, if an opportunity comes across your desk, do your due diligence when investing with the respective sponsors, the property, the market, and the business plan. Just like you would go into buying Amazon stock or Tesla stock or whatever stock it is, you got to make sure you're doing the proper due diligence, that there is a path to being able to achieve the measures in which you think they're going to do, right? At the end of the day, real estate is similar to a bond or a blue chip dividend stock. The past couple of years were an aberration, but it's more of, I'm going to buy something at a good level and make sure we can clip a coupon once we execute the business plan.
Yeah, no, absolutely. No, cool. Great conversation. We're pretty much winding down here. We're going to kind of break away from the syndication and multifamily chat, and we're going to get more personal. When you're not syndicating or running your other hats, what do you love to do? What do you enjoy doing?
I love spending time with my family. I got 2 boys that just keep me going at all times. They're up at 5 a.m., 5:30 most days, and they don't stop until they go to bed. So between that and that's my number one priority. They're my why. So they keep me extremely busy. And when time permits, I like playing golf, reading books, and exercising. Luckily, my boys are into most of that stuff too, so it makes it much easier.
Oh, absolutely. Oh, very good. How can people find you, get a hold of you?
Sure. You can give me a call. That's the best way. I love talking to anybody who has an ear, and I love
Yes.
listening to as well. My number is 978-835-9376. My phone's always on. If I don't pick up, I will definitely give you a call back. So, yeah, for anybody who wants to chat, please feel free to give me a call.
Yeah, and I'll plug you a little bit. So I'm invested with Brendan on one of the syndications as an LP, and I'll give you guys major credits for the transparency and the communication, and the project is doing well. So everything turns out well. The one thing I love about your reports are they're very simple and straight to the point, and not over sophisticated. While I know some people love numbers, sometimes it's easier just to say things are going well. These are the very key KPIs we're hitting that are very easy to understand and process. So I appreciate you for that, and want to say you guys do an amazing job.
The number one rule for it is making sure through the good times and the bad times that we're being transparent and communicative to our investors, to our lenders, to our operators, and to our residents as well. We take pride in being able to provide housing, high quality housing at affordable rates to our tenant, to our residents, and making sure there's good opportunity for our investors. And if there's anything goes awry, we're the first people to know about it. We don't want Brandon to call me telling me what's going on in Florence, Alabama. I want to make sure I'm fully prepared for everything. So this goes back into why I enjoy asset management so much as well. But yeah, thank you so much for that, Brandon. It means a lot to me, and I'm very flattered. Again, it's critical. It's just one of those things that you need to do. Like,
Yeah,
if you were investing as I mentioned, if you're investing into a stock, you want that communication coming from you, and you want to be able to understand what's going on, and being able to say, hey, if the project goes awry, because not all investments are like the one in Alabama. I have other ones as well that it's not just a linear path to getting there. There's cycles that even in a 2-year hold period that you have to weather, and you have to be able to right the ship, because as I mentioned, people are entrusting me with their hard-earned money to be able to invest in it. So thank you.
yeah, absolutely. And one thing I learned from an LP, I do aspire to be on the GP side one day, and I'm watching and learning. And I think one of the main things that can help you with your being successful as a GP is communication.
Yeah.
As even in the worst of times, as long as you are ahead and you're transparent and you're communicating what's going on, especially when money is not coming in and you're explaining ahead, like, hey, there may not be a distribution this month or this quarter for whatever reason. It does help versus asking, where's my money? We're supposed to receive it. And that's happened to me before, but I've also been communicated where it's like, hey, distribution wouldn't be coming through because we had huge CapEx issues, and then it's like, okay, understood, so absolutely.
I'm glad you're in this one, Brandon, because not every deal is rosy. I will tell you that. Like, as much as we like to underwrite our deals to make sure we're protecting our downside, stuff happens, right? We bought, and I might be elongating this, but I want to make sure it's perfectly clear for people. I haven't made a distribution on one of my deals in 2 years, right? But like, there's other things that have happened. We didn't go through a capital call, but it's capital preservation at this point. We're almost at a point where we can start cash flowing on the property. We bought it in February of 2022. 3 weeks later, the Fed started an interest rate hike that brought the overnight rate from zero, or as close to zero as possible, to 525, 550 today, right? Like, we put on short-term debt, but there's things in which we knew we had to do. This is why we don't go out and buy deals all of the time. Like, we're very selective in what we do, because we raise additional money on top of that $1 million to go buy the property. We brought in an additional $1 million. It dilutes some of the returns for our investors, but guess what? It makes us sleep much better at night. And we make sure we don't overburden ourselves when we buy property, because we need to make sure we have us as GPs have cash available, because it's going to come to us first before we ever go to our investors asking for more money. That dilutes their shares.
Absolutely. And yeah, also with that said, like you said, stuff happens. Investing in syndication is very similar in a sense of a financial investment in small multifamily. There's still risk involved, and there is the ultimate risk that you lose all your money. It doesn't happen very often, but it does. It does happen.
It can.
So it's even investors getting into it, they have to understand that this can't be your only $50,000 or $100,000 you own to your name. It is still risk, even though you're handing it up to someone else and you're trusting them. There is still risk involved. So that 50 or 100 grand or 150, whatever you're giving up. I personally going right now, being newer, I go in with it, not even thinking about the income, but more so the end result of the 3 to 5 year exit versus the.
That's what you got to look at it from. Because a couple of my LP positions that I mentioned earlier, there's been capital calls. There's stuff that's gone wrong at the property level, right? And it happens. Like, this is the nature of investing. and
Absolutely.
there's risk involved with it. So yeah, just be careful out there. It's not easy, and everybody is not a real estate genius because they bought in 2019 to 2021 and just rode the wave. There's actual fundamental investing that needs to take place in today's markets, and it's critical to be able to partner with operators who will do everything they can to make sure first we preserve your wealth and then grow your wealth as well.
Absolutely. Spoken like a professional. I like it. All right, we're going to start to wrap this up. Are there any last words you want to leave for the audience, Brendan?
Yes, being able to identify what phase the market cycle is in is critical to being able to identify opportunities, risks, appropriate returns, and strategies to execute. What does that mean? That's a lot of like mumbo jumbo. Just understand where you are in the marketplace and what your surroundings are.
Cool. Well, I appreciate you, man. For our audience, thank you all for tuning in to another episode of The Agent Investor. We wish you all the best in your health and your happiness. Thank you so much, Brendan, for joining us. And thank you all for joining us as well. Until next time, we'll see you all later.